Hey everyone, I'm Charting Man Dan with the Chart Guys. I've taken a whole bunch of trades in my life. We're going to check in on the broader market, looking at the mining stocks yet again. We had a big time pullback. I didn't get my ideal setup, but still a whole lot of trading opportunity. The broader market looks ready for potential daily consolidation. We've got one more trading day in the rest of the entire year. Let's see where we stand.
So bulls still keeping control. We have SPY pretty much flat and the NASDAQ down just a tiny bit. So overall, an uneventful day, but again, still trading opportunity in our volatile names. I've only been trading crypto miners for day trades the last 2 weeks. Don't even really look elsewhere. And the S&P 500, keep it simple, 4-hour uptrend and EMA 12 support. We've been holding it for days. That is our guide in the short term. When we lose it, we'll zoom out and we'll look for a daily higher low to try and form compared to our sucker punch low. NASDAQ, same deal. 4 hours an uptrend, potentially shifting a little bit into the close today, but we're watching for a daily higher low unless things shift. Right now, QQQ can pull back 1.5% and still be holding the daily support level. We can pull back 2% and still be just above that support. So bulls do still have some space to work with, even if we do pull back for a couple of days. But again, it's starting to look like a little bit of a temporary top. That said, the bears have to prove it to us. Semiconductors, same deal. Grinding higher still. Still a higher low and a higher... No, today actually was just an inside bar, but higher low pattern. Have to see that break. We had a great day for ARM. ARM has been grinding higher, and today it finally turned on its jets a bit with some volume behind it. And again, just back in hindsight, when we were looking at this chart right here, this is exactly what we were hoping would happen. And so just, again, walking up stops, every little higher low, and we'll see if the bulls can keep chugging along. 74 is now our short-term support level, but same thing, we're going to look for a daily higher low and look for a new support level to be found. Congrats to the bulls on ARM. NVDA ARM's move has me watching NVDA a little bit closer. Again, we're just grinding here between 480 and 500, and we're just building up a lot of pressure here. Volatility is coming to NVDA in the first couple weeks of January, without a doubt. And I made one attempt to long today, looking for a 15-minute higher low, but I was a bit early, so stopped out of that. We did not hold the 15-minute EMA 12. And again, if we're going to break resistance, it's going to be on high volume. So I would suggest setting some volume alerts for NVDA because we're not going through 500 without more than average volume, in my opinion. Tesla, big bear day today. That was a lead bear. And I wasn't watching Tesla today, but we opened, we broke the high of Friday, or the high of yesterday, I should say, and then it was all downhill from there. Look at the 15-minute time frame. We didn't even touch EMA 12 resistance. Bear flag, bear flag, bear flag, bear flag, and just an all-out dump to hourly oversold conditions. There's a ton of space for an hourly lower high to be the most likely result of the next bounce. Very similar candle to last Wednesday. Still a daily uptrend, anything above 247, but obviously a big setback and a lot of space for that hourly lower high from here. So we are watching Tesla for the relative strength to try and show up, but look at where we double topped. The level in the short term, unable to get over it and staying weaker than the NASDAQ overall. Healthcare helped offset the NASDAQ drop today. Just continuation, hitting fresh highs. Again, we're looking big picture. Remember this 2-month equilibrium? Well, it broke bull by getting over 135.68. And now we're just looking up at the all-time high, which is 2.5% away. Tons of space for the weekly higher low next consolidation, but the daily uptrend will remain our guide. XLF, same deal. Big drop, grind up since then. Fresh highs and resistance from here. We're just looking up towards the all-time highs as there's not a whole lot nearby. Tons of space for the weekly higher low, but no sign of the top just yet. So again, every day I see weakness, I'm looking around at other markets to see, or other sectors, or other things holding it up. And the NASDAQ dropped today for the first 30 minutes of the trading day, first 40 minutes. And again, just, as I'm seeing the NASDAQ drop, my brain says, okay, is it time for daily consolidation? As this is happening, and I look for XLF, nope, we're going inverse, and we're hitting fresh highs. Nothing to worry about. XLV, nope, we're going inverse, fresh highs. Nothing to worry about. IWM, daily inside, nope, we broke the low of yesterday by a few pennies. So technically daily consolidation underway. Anything above 196.16 will be a daily high or low. ARKK, stalling out a little bit. Biotech sector, stalling out perhaps into daily consolidation. So it's looking like bulls are a bit tired. I mean, it's the end of the year. Maybe they're tired from an entire year and they want to take a little breather into next year. But looking for the potential of daily consolidation in the markets. Bears got to prove it tomorrow. Solar sector, still grinding higher. And airliners, hanging out sideways. Some decent resistance to be watching there. That's a zone worth watching. And we had names like CMG, Break Bear, Tightening Range. Talked about this in the Balancing Patterns video. And then we've got GoDaddy. Is it going to follow? They sure look similar. Something to keep an eye on. Crypto stocks. So I didn't get the gap up I wanted. In yesterday's video, I said, give me a gap up and I'm going aggressive bearish. And the dump happened in pre-market. And shout out to Jungle Funk Joey, who on our Chart Guys members live stream yesterday afternoon talked about the puts he was in. I'll attach that little clip at the end of this video. So he had a little bit more guts than me in terms of holding overnight. But again, just trading it like a madman. Pre-market, I was in bed. First time I've placed a phone trade from bed, buying 28.50. Definitely sold it too soon under 29, but a nice bounce there. And then was looking bearish. I had a bear lean, knowing daily consolidation is extremely due. So, got a bunch of posts here. That's the second trade. I had some trades. I had a handful of trades where I would stop out, break even, and try and position. But the ones that worked out the best was the first one on the morning. So essentially what I did is I shorted, and then I anticipated a 5-minute equilibrium. The 5-minute equilibrium broke bull. On that bull break, I stopped out of a short break even, and I jumped into a long. And then I stopped out at a long break even. And I knew that's the possibility of a 15-minute lower high. And so I say 15-minute lower high shaping up, 2-minute head and shoulders is possible. And so we go to the 2-minute time frame, and this is the pattern that I was looking for. Again, if we fail the high of the day, that often happens. You will see an equilibrium on a shorter term time frame break into a tightening range on a longer term time frame, which is why I always say whenever an equilibrium breaks, zoom out to ensure you don't get faked out. And so the reason I entered long on this, I flipped and stopped out the short and went long. I sold half right away and then stuck my stop break even, knowing the possibility of the 15-minute lower high. So then we see this pattern, and I short the 2-minute lower high. So I'm trying for the 2-minute lower high. I got to fill, I think it was 29.70s. I exit partial 29.56, and now my stop goes over that right shoulder high. That's either the 15-minute lower high being set or I'm wrong. And so we pulled back from there, and my game plan was to hold to hourly oversold conditions. But I made a post. I had a handful of conference calls, meetings and stuff during the middle of the day, so I knew I wouldn't be able to be watching closely. And so I exited 27.70, took all the profit, said, I'm about to be distracted. I like the profit, so I'm locking it in. We get the big old bounce, and I'm in my meetings, not paying attention, and then I come back. I got another trade here. So this is me saying aggressive bears, top fishing wiggle room, and now I'm in between meetings. I've got a meeting in 4 minutes coming up. So aggressive bears, top fishing with some wiggle room. I got another call now, so I'm giving it an attempt. 51-cent stop. So that's what I'm talking about. I shorted right here, playing off of 29.44. I was risking maybe 10 cents. I missed getting stopped out by a penny. Why did I choose 29.51? Number one, wiggle room. Got to give a bit of wiggle room above that high. Number two, psychological level. 29.50 is a nice round number. Whether it's 29, 28, 29.50, 28.50, they generally have more shares on those nice round numbers than say 29.49. So I just put my stop 1 penny over the psychological level. And that's the only thing that kept me in that trade. And that led to thousands of dollars of profit because of that 1 penny. You know, if I stopped out, it would have been a loss of a few hundreds of dollars. But then from there, we pull back, 5% plus. And so exited on this bounce into the end of the day, knowing I wasn't going to swing it. And now we watch for the possibility that we head to hourly oversold conditions. So if we're weak tomorrow, we watch for hourly oversold to try and set a daily high or low. There's also a gap fill at 27.05. And all these names are following MARA. HUT, much lower open, drop and broke the low of yesterday. We were looking short because that's when you get a climax. We know we're overextended. We know the RSI is really extended, but then you get a 15% day on MARA. And that's us saying, okay, enough's enough. That's, the last whatever, hoorah before a top is set. And generally it happens in the same trading day. This was a bit tricky because it happened pre-market, and I was a bit bummed because I didn't have my ideal position. Yesterday, into the end of the day, I was short 50,000 shares of MARA, and I ended up exiting with a tiny win because I'm not swinging that overnight, and I definitely would not have had a good night's sleep as after hours we ran up, to 31.80 or whatever it was. But again, I just have to personally, the way I'm trading this is day trading. I just have to start each day with a clean slate. I'll trade in whatever direction, but it's not worth the overnight risk for me, knowing if I'm wrong on a day trade, I'm going to lose, 1%. If I'm wrong on a swing trade with a name this volatile, it could be 5%. And I don't want to risk that. So check out the Joey clip here at the end. The dollar trying to get a daily bounce going. That's leading to a pullback in the metals. So gold pulling back. Again, watching for a weekly lower high is the most likely scenario. Potential for a weekly equilibrium shaping up. And silver is weaker. Also watching for a weekly lower high. I might take a little bit more off just to be protective. It's been a really good December to end the year. And again, my swing stops for metals and miners are under these lows. Miners pulling back today after the inability to break resistance yesterday. That stop's a long ways away. I might just trim, another 25% of my remaining position. I did that with Meta today. Traded Meta. Remember, I played this 4-hour oversold bounce. Didn't intend on a swing trade. Here I am holding it a month later, 3 weeks later. And so I've scaled out a bit, exited 25% of my remaining position today. And again, it's just, 9-day stair step. Bulls looking tired recently. So just locking in a little bit more profit, looking for daily consolidation. Oil, daily uptrend confirmed. Pullback yesterday was a little bit of a red flag. Bears following through today. Weekly lower high potentially shaping up off that EMA 12. So still a clear weekly downtrend as our guide. And bulls need to shape up a weekly inverse head and shoulders if we're going to get a monthly longer term higher low. What's the energy sector doing? Maybe a little head and shoulders on the energy sector. It's a bad drawing. Nah, I'm not interested. Anyways, I hope you are having a great year. Just a reminder, I am going to be taking a step back from the regularly scheduled everyday stuff to take a bit of a break in Q1. Chart Guy Laurie will step in and doing the market videos. I'll still check in every now and again when I am inspired to do so. But other than that, I'll be hanging out in the Chart Guys chat room and going over some swing trades and checking in while I'm on my break. Headed up to the Northeast, Massachusetts and Maine, headed down to Florida for a music festival and some springs. Just a little breather. Appreciate all the support. Do good things. We'll see you soon. I'm going. the bulls keep